What is a reverse mortgage, and is it right for you? Welcome to Reverse Mortgage Educators. We are a leading educator of reverse mortgage programs. For many years, mature TV actors have appeared on your television screen telling you about the benefits of a reverse mortgage. What we are going to discuss is whether or not a reverse mortgage is right for you. The answer is probably yes if you need tax-free cash to pay bills, you don't want any more monthly mortgage payments, and if you want a worry-free retirement. That certainly sounds pretty good, but it may not be right for you. After listening to this DVD and talking to one of our reverse mortgage educators, you will be able to make a wise decision. My host role is not to sell you anything. Mine is to educate you about the pros and cons of the government-insured reverse mortgage program. To begin, a reverse mortgage is a government-insured tool called a HECM, Home Equity Conversion Mortgage, that enables seniors to gain financial independence from their increasing costs of living, and best of all, you never have to pay another monthly mortgage payment again. Let me explain how easy it is to qualify for a reverse mortgage. You must be at least 62 years or older, own and occupy the property as your primary residence. Participate in a consumer information session given by an approved HECM counselor. When is a reverse mortgage a bad idea? There are 4 situations when a reverse mortgage should not be used. First, if you only need the money for a short period of time and you can repay the borrowed amount, a reverse mortgage is not a good fit. Second, if you don't need the money right away, don't rush to take out a reverse mortgage. If you have other funds that you can use, such as CDs or savings accounts, you should consider using those funds before getting a reverse mortgage. If you need the cash right now, a government-insured reverse mortgage can be an excellent solution to supplement your income so you can stop worrying. Third, if you are being encouraged to get a reverse mortgage in order to invest in some type of risky investment, take the first train out of town. Don't ever speculate with the equity in your home. Your home is your greatest asset. Fourth, if you do not have enough money to pay your taxes or insurance, you should not consider a reverse mortgage. It is important to know you can never lose your home if you occupy your home as your primary residence. Pay the taxes, pay the insurance, and maintain your home to FHA standards. More than 500,000 households in the United States have made the decision to sign up for a reverse mortgage. Recently, AARP conducted a national survey of reverse mortgage participants and found 93% said that a reverse mortgage had a positive effect on their lives, and it may have a similar effect on your retirement.
What motivated me to get the reverse mortgage was my business was going through some financial difficulties with the economy the way it is. It allowed me to pay off my primary loan on the house, the line of credit, and pay some bills, and it worked out great for me.
Now that you know the pitfalls, benefits, and the ease to qualify, it's time I address some of the most frequently asked questions.
Will my children lose their inheritance?
Here's how it works. Once the last remaining borrower moves out of the home, it can be sold or retained by the family. If the home will be sold, then the family would receive the remaining equity after paying off the loan. If the heirs would like to keep the property, they can simply repay the lender through a new loan, cash, or a combination of the two. If your heirs decide not to keep the home, they have no obligation to repay the loan regardless of the balance owed, because it's a non-recourse loan. Since you're not making monthly payments, sometimes it feels as if you don't own your home, but you do. As long as you maintain your responsibilities, you will continue to own your home. A reverse mortgage is like any other lien on your home, in that you must pay it off. You still own your home, and your name will remain on the title. Although you're not paying any monthly mortgage payments, you are still responsible for your property taxes, homeowner's insurance, and property maintenance.
Can I get a reverse mortgage if I have an existing mortgage?
The answer is yes, but to do so you must have sufficient equity remaining in your home. quite a few people take out a reverse mortgage to pay off their existing mortgage. For example purposes only, take a 70-year-old individual. Their house is valued at $450,000. Their existing mortgage balance is $225,000. The reverse mortgage proceed would probably be $298,000. You would pay off your existing loan and will have netted $65,000 in tax-free money to do whatever you want with and never have to pay another monthly housing payment again.
These figures are examples only. To find out what you qualify for, call the number on your screen to talk to one of our reverse mortgage educators who will answer your questions in more detail.
Why don't I just go out and borrow money on the existing equity of my home?
If you take out a traditional equity line of credit, you have a monthly payment, whereas there are no monthly payments with a reverse mortgage. Furthermore, the funds of a traditional home equity line of credit are not guaranteed, and the lender always has the option to freeze the credit line for any reason, such as declining values. Recently, reverse mortgage national lending limits have been raised from $417,000 to $625,500, and the costs have come down, making the reverse mortgage a viable option for more seniors.
With food prices and doctor bills going up, I knew I needed to do something. I have been reading about the benefits of a reverse mortgage. Because it's government-insured loan, I called the reverse mortgage educators. I wanted to be educated, not sold something.
In order to safeguard your financial interests, the United States of Housing and Urban Development, known as HUD, require all HECM reverse mortgage applicants to undergo reverse mortgage counseling. When you are on the phone, your advisor will provide you with a list of FHA-approved independent counselors. We at Reverse Mortgage Educators encourage this counseling because you'll know for sure that you have made the right decision for your retirement.
What will the cost be?
In general, your costs are the same as a traditional forward mortgage: escrow, title fees, appraisal fee. But with a reverse mortgage, there's a unique mortgage insurance put in place by HUD, known as MIP, or Mortgage Insurance Premium. It could be considered the best insurance you've ever purchased because it protects you, your heirs, and your lender in the event your mortgage balance exceeds your value. This is why your funds are guaranteed and why it's truly a non-recourse loan. This may not be a decision you want to make alone. Discuss it with your family. If you choose to ask a family member for help, promise me that you'll ask them to view this DVD first. We will set up conference calls or private in-person consultations with you and the people helping you so that we're all on the same page and your interests are safeguarded.
My uncle, he enjoyed taking care of the family and providing for us. Now, as the years went on, that became increasingly more difficult for him to do. The reverse mortgage gave him the power that he needed to be able to make the decisions he wanted and provide for us as he saw fit. After looking at all the alternatives, the reverse mortgage was the right decision, and we made the right choice.
A reverse mortgage is right for 62 or older homeowners who want to live in their home with no monthly payments and who need tax-free cash to pay bills and eliminate financial worries. It's very simple to qualify for a reverse mortgage.
The process going through to qualify for the loan was very straightforward and very simple.
Our company offers a variety of payouts and options, and you will choose your option before closing your reverse mortgage. The first option would be to receive a lump sum cash payout to spend as you wish. Option 2 would be to set up a line of credit, which you can draw from whenever you want. The final option is to receive a monthly payment. The fourth way is a mixture of the three.
I was given a series of options as to how I wanted to receive the funding from the reverse mortgage. I picked the one that suited me the best.
Now we come to the fun time. Show me the money.
How much tax-free money could I get?
The amount depends on your age, your home value, current interest rates, and location. There is a very simple procedure to qualify. First step, You're already doing it. You're listening and learning about the government-insured reverse mortgage program. Second step, I want you to go to the phone and call the number on your screen, and one of our reverse mortgage educators will answer any personal questions you might have. Furthermore, your educator will also take a free, no-obligation snapshot of your financial situation. By doing so, he will be able to calculate a general range of how much tax-free money will be coming your way. And if you feel more comfortable having us come to your home, we can do that too. Third step, in order to safeguard your interests, HUD requires all HECM reverse mortgage applicants to undergo reverse mortgage counseling by an independent counselor. Fourth step, once the consultation session is completed, the appraisal is scheduled to determine the value of your property. Then it's off to the underwriter for approval and your money follows. I encourage you to call the number on your screen. Get the ball rolling for a wonderful, worry-free retirement.